Okay, so back to it. Sorry, guys. This emotional market cycle is going to repeat itself time and time again. So let's tune into these emotions so we don't get caught up in them. Okay. You have to understand when the price is down in the low cycle is mostly when people don't want it and they're scared to get involved in it. And when it's in its high cycle is when people's interest is peaked and most of the time they chase it when they shouldn't. Okay. So, and like I said, we can find this in every single time frame. Okay. It could be a 5 minute quick little impulsive move. It could be a monthly chart that's playing out. And as that happens, these emotions are felt and expressed in different time frames. So if this is a 5 minute window, 5 minute chart, this is all going to happen relatively fast. If this is a monthly chart like gold, for instance, this would be the public sentiment for and the public's perception of gold or a stock or commodity over a long period of time. So these emotions may play out fast, or they could become a larger picture of the public's perception. But let's run through them real quick. Okay, when things are really low, and mind you, this repeats itself. Okay, that's why we have disbelief over here and we have disbelief over here. This cycle is going to repeat itself over and over again. And we're gonna, after we run through these, we're gonna show you guys. We're gonna see this pattern play out in the Elliott wave formation over and over again. Especially in cryptocurrency, I have found that this will repeat itself more than in foreign exchange because there's a lot more dumb money, honestly. A lot more people that aren't making very responsible decisions and have a lot of Bitcoin. Okay, a lot of people made Bitcoin and have a lot of money now and want to make more out of it. And so there's a lot of dumb players with big money, honestly. So we're seeing this repeat itself over and over again. So when things are down here, it's really in the disbelief. When things get their first little rally out of their depressive stage, okay, the perception of the market is in disbelief. It's going to go back down. This will kind of phase out like everything else. All right. And then when it doesn't, the market gets a little bit hopeful. Okay. Maybe we'll get a recovery this time. People aren't really realizing that they should be buying in this stage and buying in this stage. So most people will wait. They'll say, okay, well, I want to wait until it seems good, wait until it looks like people are buying it, which isn't that bad of a strategy as long as you have an exit strategy. Okay, so there's really no problem with buying in optimism, but you have to be prepared to get rid of it in the euphoria. Okay, so as the price marches up, and starts to break out, the market becomes optimistic and starts to chase it and say, oh yeah, this is it. Maybe this is the one that I'm going to get rich off of, and this is the perception becomes optimistic to buy it. And then people start to believe as the price continues to go up, believe, hey, this is the best investment of my life. This is great. We're going to be rich. Then the thrill kicks in, basically where they want to, that's when the human emotion of greed starts to kick in. Right about here, you're just kind of normally feeling that you have made a good decision. Okay. But as the price keeps going up, you're blinded by greed. All right. And you have to really take awareness of that. You do not want to be blinded by greed. But this is the stage where people really start to do dumb stuff. Okay, they're blinded by greed. They start to say, let me tell everybody about this. It's the best investment ever. Let me remortgage my house and go all in on leverage, and they just really screw it up. And then euphoria kicks in where, everybody just thinks this is the best thing ever. We're all going to be rich. I should buy more of this. All right, so even if you bought down here, your mind plays tricks on you up here and says, wow, this was a great decision. I should buy more. And you really, really, really got to, curb your emotions, okay? Because what happens after the euphoric state, and you can feel the euphoric state. I mean, I'm sure you guys have all felt it when you have that feeling when your account just goes way up and you're like, wow, this is great. I'm making money off of this. I'm going to be rich. And then, you go to the shower, the bathroom, you come back and the price tanked. So, or even you bought more when you felt that way. So, really got to watch out for these emotions because this is how people are losing. Like to really understand how we're going to win in this game, you have to understand how people are losing. It's the only way to do it. All right. And then the price comes back down here and rallies back up a little bit. And this is where the market's complacent. Okay. Everybody's kind of like, oh, well, this was a great decision. We're all still going to be rich. And, you know, we just need one more rally, and, you know, the market just needs to breathe a little bit. Okay. But then the price starts to fall down and it starts to break down. And then all the other emotions kick in: anxiety, denial, panic, capitulation. Basically, where as you go through these emotions, this is where most traders exercise patience at the wrong time. Simple as that. You know, you want to cut your losses short. If you're in a trade at about here, okay, and you see that it cracked and you might have just been in a complacent stage, even if you're taking a little bit of a loss, you need to cut your losses short. Really, that's the only way you're going to win in this game, is to recognize your losses, cut them short. Don't hold on to them thinking that, oh, well, I just need that one last rally to my break even or until I'm going to be rich. You know, you have to really be mindful of your emotions. And this is where most traders will exercise patience when they shouldn't. They'll hold on to a losing trade, and the anxiety kicks in, the denial. You know, you start to really even deny it. Oh, this will go back up. It has to go back up. Look how powerful it was, how strong it was. And then the panic, and then basically the capitulation, where, you know, you want to get even $5 out of a market if you put 1,000 in it. Really, it gets to that point where people will literally sell everything on the floor at the lowest strength of the market because they bought at the wrong time, and they'll get rid of 95% of their investment just to get back that 5%. Okay, and then the anger kicks in, where once the anger kicks in and you've been through this emotional torture, you don't want to buy it down here. Nobody's really thinking about buying it down here because they've just been torn apart psychologically on the whole ride. Okay, so really tuning into these emotions and how other traders are experiencing them is the only way that I've ever just found to make money in the market. Okay, for years I decided, you know, I was going to use this strategy or that strategy, trade off of this indicator, and they all kind of work a little bit for a little bit of time, but I still found myself chasing things and holding on to things too long and not understanding the real mechanics of the market that were going on. So now let's kind of break it down and look here. Okay. First here, we'll look at XMR on the 12-hour. This is the complete emotional cycle right here. All right. Now, this is going to play out time and time again. And a really good example of that would be actually Ethereum. Okay, well, let's look at a couple. Here we have it here in Monero. Okay. This is the entire emotional cycle right here. Okay. We have it here basically: optimistic, belief, thrill, euphoria. The price comes back down, rallies back up. Could be this little wave right here, just about right here. That's when you reach complacency. And then here, it starts to break down and you kind of deny it. You know, anxious, anxiety, depression, anger, all the way down to just get me out of this market. And then it goes through a little phase, comes back up, and repeats itself. Okay? Time and time again. There's no escaping it. Okay? And it does it in all of these markets. Okay? We're looking at higher time frames now for Monero. Let's look at the 3-day for Bitcoin. Here it is right here. Took a little bit longer to play out on a larger scale, but again, same thing. Now we don't see our distinct 5 waves up of our Elliott on this one because we would find them in smaller time frames. But this is the same emotional cycle right here. The same emotional cycle right here. Okay? And really just taking note of this simple thing, like we're going to refer back to this over and over again to figure out where we are at in our trade in the emotional cycle. Okay? Now, we have it here, Bitcoin. If we look on Bitstamp, there's actually even a previous bubble that Bitcoin had that had it back here that was relative to its time frame. Okay, let's just get rid of these drawing tools. Okay, so here we have the one everybody kind of knows about. You know, we have this market cycle of Bitcoin that we just pointed out. Okay, but there was also a market cycle before that, and even before that on Mt. Gox, but we don't have the access to those charts anymore. But this, in its relative time frame, was the same thing. Okay, this is the same exact emotions of emotional market structure right here. All right, and it is in everything. You see here in Ethereum. Come on, chart so skewed. Where's it at? Well, let's reset that real quick. Go to something else. Go back to Ethereum. Okay. Okay, now, again on Ethereum, go back to here. Here it is here. Okay. Now, Ethereum is breaking out and creating a new market cycle. And we're going to talk about how to track these things and understand the waves that they're moving in. But you just really need to understand that when one market cycle ends, another one begins. Okay? Ethereum ended its market cycle. Bitcoin ended its market cycle. Monero ended its market cycle. We're creating new market cycles. And even here, now look at this. Back here. Now this looks like a flat old line right here. Okay, but relative to its time frame, this was an emotional market cycle right here. Especially if we were to look at it more on like the daily. Okay. Another emotional market cycle right here. The first one for Ethereum. Goes through its emotional market cycle. People chase it all the way up. They think it's going up to the moon. It comes, they get complacent, and then it just dumps down. They hold on to it too long. It bleeds all the way down, goes through depression, and then it gets optimistic, and it breaks out again. Okay? But what happens every time that these market cycles repeat? They get bigger. Okay? They get bigger. So now Ethereum's market cycle, it's a flat line now. We're so far expanded in price that this previous market cycle has just almost disappeared on this chart. And that's kind of what's going to happen here as we continue to rally in price here with these markets. Okay. Right here, the emotional market cycle. Same thing. Okay. There's a lot of money to be made on the way up, but you have to understand to recognize that there is going to be a down. Like this thing is not just going to go right to the moon when you think it is. You know, a lot of people have to come in and double their money and take profit and lose, honestly. The market has to go through experiencing a big wash of loss for everybody for it to continue on. And so what we went through here with Ethereum, once we broke it, we started again. Okay? And sometimes really simple things mean a lot. Okay, like trading from an aspect of support and resistance really can just identify when your trends are breaking. Okay, like I don't use tons of tools and tons of indicators to trade with. I really focus on the structure of the market and what I'm expecting and how it's going to hit certain Fibonacci ratios and the strength of the market behind it, and how this is going to unfold in an Elliott wave formation. Okay. Once you identify this, then it starts to open the door a little bit to understand what side of the trade you should be on. Okay, like just simple as that. What side of the trade you should be on. And let's look at this more on like the daily here. Okay, just understanding market structure and the psychology of the market, you can just kind of identify right away that there's a time to be buying the market, and then there's a time to be selling the market. And you don't want to get caught on the wrong side of the trade, honestly. You want to be able to identify that this is the sell side of the market over here. This is the buying side of the market. This is the impulsive wave up. This is the retracement. You don't want to fight the trend. You don't ever want to fight the trend. That's why I never will short a bull market, because you don't ever really know where the top's going to be. Okay? So, and I won't ever really long in a bear market, because you don't really, you don't really know where the bottom is going to be. You may think, oh, it's going to turn around here and it goes lower and you get wiped out, especially in margin. So remember that, like, there's a time that, that you will start to short Ethereum, and there's a time that we will start to short Dash, but the time has to present itself, okay? And really, the way that it presents itself is actually rather simple. I mean, a lot of people think it's more complicated than it is, but what you'll find is that all these things, even if they're making huge moves, they're still riding in a relative trend, okay? And when that trend breaks, it becomes pretty evident. So even though this thing, for instance, Ethereum here, okay, even though this thing rallied way high up, there was a trend it was riding on, okay? And once you could identify that trend and really adjust your chart until you really can see the trend, you basically have this thing riding on a nice trend about right here, okay? Now, if we look at that like this, sure, that looks straight up into the sky, okay? But that's the trend that this thing rode on. That's like Dash is riding on a trend like that right now. And we're going to be able to identify when Dash is ready to break down. When it breaks this line, the trend is over, okay? It's as simple as that. Like, it really is as simple as that. Like, when this line broke here for Ethereum, that's it. The impulsive cycle is done. You're going to have these little ups and fighting, but the impulsive cycle has finished itself, okay? And the way to identify that is to understand that the entire market structure is unfolding in Elliott wave theory, okay? This entire emotional structure that we see presents itself in Elliott wave fashion, okay, where we're going to have the market making specific 5 impulsive waves up and then a retracement. Now, this retracement could fall very deep, could fall very shallow. And within these impulsive waves, we're going to have waves within waves. So it can get a little bit easy to get lost in Elliott wave theory, I will admit. But if you really, really pay attention to the bigger picture at hand, it kind of presents itself more. Like, I don't really get lost in the sub-minute waves. I try to focus on the bigger picture that's happening, on the bigger Elliott that is going to unfold, or the bigger market cycle that we're starting to experience. Okay. So here, if we want to break down Ethereum, we can see that this thing made some nice impulsive waves up. Basically, from where it broke out, we could even say, count it from here, we have a nice, oops, I'm on the wrong one, guys. Impulsive wave up. There we go. We have a nice wave up. 2, 3, 4, and a 5. Bang. And then after that, we came to our whole ABC retracement. Now, this thing also started making impulsive waves down. But when we look at our bigger picture, we really just have an A, a B, and a long C retracement. Not sure why we're getting that beeping noise there, guys. Basically, from the top, we fell, and then we get a nice long retracement here. Now, in here, there's waves within waves within waves. But you have to understand, we're expecting this entire thing, once it's done its impulsive side, we're expecting the entire thing to break down and fight. This right here, this A to B, that's the fight. Seems like somebody's jumping in and out here. I don't know why. That's the fight. Okay, that's the bull trap is that A to B run. All right. Let's just remove all these drawing tools. I will find Elliott waves in all time frames in all of these coins now. In all time frames in all of these coins. And so let's start looking at a couple of them here. on some smaller time frames, because we're having a lot of these altcoins make impulsive Elliott wave cycles. And you can see Ethereum is creating another market cycle here. We'll get into that a little bit later. And it seems like for you guys that are trading Ethereum, it seems like it's getting ready to either break out here or fool everybody, fall down one more little retracement, and then break and continue on. Let's start looking at some of these altcoins here. Because everybody, I know you guys are all playing altcoins, and there's a lot of money to be made because a lot of these things are doubling up. But we see the same market structure here. Okay, we'll start with our corrective side. We got an A, B, C correction here. We have an impulsive wave up. And then the ABC correction. Okay, now after this breaks, okay, after this completely bleeds down and gets everybody out of the market, what happens? Starts to rally up again. Okay, over here, starts to rally up again. The disbelief happens, and then that will turn into hope. Same thing, it's happening here. This is even breaking out right in front of us right now. Okay, I talked about this one before. I even put it in a public video. There's just so many of these things making Elliott wave formations. But what happens when one market cycle ends is another one begins. So eventually we're going to skew this chart down like this and be looking at a larger picture for Ardor in the future. This thing's going to make, new high and create a new market cycle leg. Okay? Because one thing's just going to lead to another. Once it washes everybody out, only the people that understand where to get in are going to get in and just kind of hold and be patient. That's the time to be patient in your trades. Okay? Not when you're holding on to a losing trade. And a lot of people make that mistake. Like, you have to really ask yourself that, because once you have a winning trade, sometimes you want to get rid of it too soon and your mind plays tricks on you. And you really have to, discipline yourself and say, wow, well, how long did I lose money and hold on to losing trades longer than I should have? Let me hold on to my winners. Okay, and that's really another factor is you really have to cut your losses short and let your winners ride. You really do. So after this created a complete market cycle, okay, and we have an Elliott wave formation up and an ABC retracement down, all this thing really did was create a larger Elliott wave in itself, okay? Because you can see we got a 1, 2, 3, 4, 5 up and an ABC retracement. Now, mind you, this one in this example fell to about maybe 50%, okay? And then it continued on. Whereas something with Ardor, this one fell the usual cryptocurrency, like 78.6, 88% or so. Yeah, right around here, about 88%. Bitcoin did the same thing. If you guys don't have your 88%, 0.88 on your fib, I would suggest, just kind of doing your settings on it. Oops, wrong one. Doing your settings on it and adding in right here, 0.88, 0.883, sorry, and definitely have checked the 1.272, the 2.272, and the 1.61. Yeah, the 1.618 for our extensions. You definitely want to have those checked because those will lead us to our targets in the future when we start talking about Fibonacci. But a lot of what we're doing here is recognizing market cycle, market structure, which is the emotional market cycle, and how that is playing itself out in Elliott waves, okay, in these forms, okay? We're going to have, if it's a bullish market, we're going to have a distinct 1, 2, 3, 4, 5 up. When the market starts to get a little bearish, we're going to have impulsive legs down, okay? Now, Bitcoin just made an impulsive 5-wave formation down, which is why I'm not so bullish on Bitcoin at the current moment, all right? We'll get back into that a little bit later, but we want to break down this repetitive pattern here, okay? When this is going to get so repetitive that you're going to be, why are we looking at the same pattern over and over again? But trust me, when you identify this pattern and can pick it out in any market, then you understand. You understand, oh, here's the time that I should be selling the market. And here's the time that I should be buying the market. Just simple things like that by understanding Elliott wave theory. You understand where you shouldn't chase it and where you should be happy with your profits and move on. Okay, and the same emotions, even though this is a 6-hour chart, these same emotions were felt here. Okay, all the way up, these 5 legs up, and we start to get, okay, the belief, the thrill, the euphoria, and then bang, it comes back down. And right about here, okay, we're complacent. We just need that one more rally, and then it breaks. And then even it'll come up here and stop out the people that shorted it, and then it comes back down. So this is going to repeat itself over and over and over. And that's the beauty of it, honestly. That is the beauty of it, is that a lot of people aren't looking for this. And it's so easy. My trading strategy, I simplified so many things over the years because I used to use so many indicators and so many lines and so many things. Come on, let's go. Come on, Stratus. All right. Same thing here with Strat, guys. Same thing. It's the same pattern. This chart almost looks exactly like our orders. Okay. Almost the same thing. We got this one almost looks like it did 100% retracement here. Yeah, this one basically almost did 100% retracement here. Really, really low retracement on that. But we got the same market psychology pattern here. This one actually gave us a little bit of a 4 wave. Sometimes we see this when things will break out of their, that kind of goes more into Wyckoff theory. We'll kind of get into that a little bit more in the later days. But see, this thing kind of accumulated here and then it tagged down and then it sprung up. Well, from that breakout line, it's kind of like this is where I'm considering that first wave here. These impulses here. Because this lower one was kind of just like the one that tagged our previous accumulation zone here and then broke out. And then same thing on the downside. Same thing on the downside. This one didn't get much of a rally and then it just came all the way down like this. So depending on where you identify your wave structure, is going to identify where you should be buying and where you should be selling. Okay, especially this is a little bit easier in cryptocurrency because most of these markets aren't being shorted. Okay, so you're not really dealing with much other than looking for the buy setups on a lot of these altcoins because mostly because here. Only people that are selling these coins down are people that bought them too late. Like people aren't taking a margin leverage position against the market here. So we're really, in most cryptocurrency and altcoins, we're just identifying buy setups. I mean, we really are. Identifying when to buy and when to sell. You want to buy low, you want to sell high. And you want to be able to identify when it's too late. Okay, like, yeah, you could buy this breakout right here, but you have to be prepared and realize, okay, we've already made a couple waves up, and after this one gets pretty expired and we start seeing some, wicks in price here, then it's time to get out. You don't want to hold it all the way down here and think it's going to keep going up because you're going to, have to really exercise patience because it's going to take a while to go back up. Okay, so really identifying the 5 waves up, okay, the impulsive side of the market is going to let you know when you should be buying. Simple as that. And when you should let go of that trade. Like a lot of these cryptocurrencies, will be worth a lot more money in a few years. But are we trying to hold on to them for that long? I mean, not me. I'll be in and out of Bitcoin several times as the price fluctuates because I'm trying to gain US dollar. Because as of right now, I can't buy, groceries and pay my electric and all that with Bitcoin. For me, it's just a market to make money. And all of these cryptocurrencies are just markets to make more Bitcoin, which is, to make more money. So we want to really identify the wave structure as things start to break out and understand when it's time to get out. Simple as that. When it's time to get out and not hold on to our trades too long. Okay, let's look at Dash. Now Dash is on a serious tear here. Okay, and a lot of you guys probably realize that especially the public chart that I put out. I kind of saw this pump coming. I realized that this was going to happen after we had this breakout right here. Okay. And that's because the market structure and the emotional market cycle is going to repeat itself. Okay. Once we break certain ground, we're going to repeat it on a higher level. Okay. Because the price is going to continue to climb. Now let's look at Dash right now and the structure that it's in. Now, we are definitely nearing complacency on Dash. Okay. Now, we're getting to that point. We're climbing up. Once we sell down a little bit and we start to climb up a little bit more, the market's going to get complacent and think that it's going to still run. And then it will crack. It will crack. And a lot of people are going to hold on too long and fight the trend. We are reaching that point very close here in Dash. I wouldn't say we're there yet because we still look like we could oscillate in some strength. So don't go short in Dash just on, after watching this webinar, because you might get wrecked still, because it still looks like it might go a little higher. It still does, because it hasn't hit my Fibonacci target yet, I don't think. What do we got? Close, but has not hit the 0.130 just yet. I think it's going to do one more little jump up, and then it will break down. But we'll know. Once it starts to break its trend, we'll know. We'll definitely know. Same way so. It's creating a trend right here. Okay? Even though that trend is pointing straight up into the sky when we look at it this way, and when we first looked at our chart, that trend, compared to everything else, that trend is pointing straight to the sky. But this is riding on that trend. There's no doubt about it. So when this trend breaks and starts to break down, then we know it's time to, be. Right now, the market is still in the buy the bottoms mentality. Okay, if it dips down, you buy it because it's going to go higher. Once it breaks this line, you don't buy the dips anymore. You sell the tops. It really is. It can be broken down that simply. Once you break the support trend and you seem like you have your wave count up, this looks like it was our accumulation wave, and we're getting a 1, 2, 3, 4, 5, maybe even another little bang out of this. But once it breaks the support trend, that's it. It's not time to be buying Dash anymore. It's time to look for every little top it makes and start selling it. But what's interesting, especially with Dash, is that all this, now look, now that we've created this market structure, and we have to look at it in this time frame, look at everything in the past. It looks like a flat line. Everything back here looks just like a flat line because of how much we've expanded in price. But if we want to go into these time frames, okay, if we want to go back here, kind of look at it more on like the 12-hour. Okay. Let's go back here. Now, for Dash. Dash had several repetitive market cycles. Okay. Back in, this is about it. I remember this pump. This is when it was still called dark coin. Okay. Some of you guys were around then. Some of you guys are new to crypto, but this, this happened on Poloniex. Also happened on MintPal when MintPal was still around. And look, this is the same market structure. This is 2014. All right. What do you see there? It's the same repetitive market structure pattern. Okay. Now this is back when Dash went from, like 150, I was like 75,000 Satoshis up to, 275. It was definitely a huge pump. I remember it was like, one of the best pumps, almost 2,000%. Okay. And then it came crashing down. What happened during that time? Well, it looks like the market seemed to seriously want to make a nice staircase up here. Okay. We got a nice, wrong one. We got a nice breakout here. Nice run up here. Bang. Bang. After that, what happened? After we got our 5 waves up, right about there, sold down, right about here, the market got complacent. Oh, we're still going to go, and then a breakdown, and then a breakdown. And then we get our ABC retracement, okay? ABC retracement on that side, came down, gave us that, fake out bull run, and then it broke down further, basically all the way down to about, I think about here. Let's take a look. Oops. Came down a little further. See here. Now, this entire market structure is the same. It is the same that we just experienced and we're experiencing now. The way to play these things, though, is to understand them, identify them, and when they come and when they go, and where you want them again. Okay? After this did its whole run up, it came back down. Basically, same thing. Between the 78.6 and the 88% right here is when it was a buy again. And then it created another market cycle, and then another one. Okay? Until it just completely broke out and left behind all this price discovery. So after this market cycle here, it accumulated, then it started to get that same hopeful feeling. Okay, and then it did another run up. Came back down. Over here, I started to do another run up. Except for this one, let's scrunch it a little bit closer together so we can see it. Except for this one, left its price discovery zone. Okay, and that's something we really need to understand about these things, is that once they leave a certain zone, they create new market structure, new everything. Okay, like once Dash left this zone behind right here, this is now considered, to me, price discovery. Even though that these were 2,000% pumps in here, and this one was about 2,000%. This one was like 400 or 500%. This one increased very much, like maybe 300%, came back down. This one here also, a nice market cycle, and then it just left. It left behind all of that price discovery. Now, you really need to be able to identify that, because this is where the money's at. Because once it left this old zone behind, it was free. It was free to do whatever the hell it wanted, or wherever these whales were going to push it to. Okay? And there's a lot of really good whales in dark Dash. And I think they're the same whales as Monero, because these market structures for Dash and Monero are identical. Okay? That's another thing. You're going to pick out very identifiable market structures in a lot of these altcoins. And basically, I got all my targets for Dash by the duplicate market structure from Monero, because Monero already went through this phase that Dash is going through right now. Okay. After we left behind the old market structure, then we had a very big impulsive wave out that most people were scared to buy the retracement of, because they think, oh, well, this thing just went from all the way down here. There's no way I'm buying that retracement. And I remember I did a poll on Twitter, and I said, who's going to buy the Dash retracement? And most people's answer were, no way, you're crazy. No, not crazy. Understanding market psychology and the cycles of the market. This was the prime entry right here for Dash. Okay? And this is one of my biggest things that I'm going to teach you guys, is that when you see a market impulsing and breaking out, do not chase it. Never chase it. Okay? It will always come back down and give you an entrance. Okay, unless you're way far in its advancement of its impulsements, and you have to like really get to entry when you can. Like for instance, when this broke out of here, your only real entry was this wick back down in this area. But here, this thing played out and did a nice impulse, and they gave you plenty of time to try to get in. Like this is basically what this move right here, this move right here is what Zcash is doing right now. Okay, on a higher time frame. It just broke out. Now it's consolidating and trending up until it gets to the point it's going to snap and break out. especially with Zcash because there's such a limited amount of coins. That has a big factor doing all this too, guys, is that cryptocurrency price is determined by the amount of money in the market cap, divided by the coin count, by how many coins there are. So, really, the less coins that there are and the higher the market cap, the faster the market's going to fly because there's less supply there. For when the demand comes, there's going to be less supply and the market will move faster. All right, Dash has a very small number of coins. It's been moving very fast up since it's left its price discovery zone. So here, after it left behind all the old price action, it creates a new market cycle. When this thing's done, it's going to look exactly like this. Make no mistake. It will come crashing down, okay? It will come crashing down. This will most likely, wind up probably all the way back down here, back down to maybe even here, about 345 or so, because these things are not going to let everybody just make money off them and walk away. Okay, that's the way the market works. Is that most people are going to lose, and you have to understand that. So, how are 90% of everybody losing? By chasing things, by fighting the trend, by not taking profit when it's there. That's a big one, okay? Not taking profit when it's there eventually will lead to loss, because if you didn't take your profit, then maybe you'll hold on to the trade too long, and when the trade is actually going wrong, you'll still hold on to it. So that's a big one. When your profit is on the table, guys, take it. Especially if you got anywhere from 30 to 40% in a small time frame, just take it. Get back in on the retracement. All right. So yeah, this thing will most likely, from where it broke out, wind up all the way back down here in this zone. Okay. And it would be I wouldn't short it right now because it doesn't really seem like it's breaking down just yet. But there'll be plenty of time to short it. I don't want to call the tops because this thing's a raging bull. But things are leading up to the point where it's getting there. But look, this thing copied Monero exactly. All right. Well, I already got Monero here. Look, here it is. All right. Same thing with Monero, guys. Let's forget about all this with Monero that happened, and let's look at everything before that happened in its relative time frame. Well, look, Monero had some price discoveries, pumps and dumps. Let's see here. All right, here we go. Nice market cycle here. Okay, let's see. This is where it got dropped into the exchange. Yeah, okay, so here it gets dropped in, fights, tries to find its comfortable price action here. When things get dropped in the exchange, it's really bouncy. I mean, you guys might have experienced Pascal, Golem, when these things get dropped in, they usually, will go up and down and then finally find a bleeding spot until they can get some kind of market behind them. And then once they do, they create a market cycle. Okay. Once this thing hit here, it created a nice market cycle. All right. Nice market cycle. This one seemed pretty bullish, like maybe it held about, what does that look like? About 61% maybe. Oh no, 78.6. Wow, this guy's having a hard time here. 78.6. Same, didn't fall so low here on this one. Created a nice market cycle there. Bled all the way down. Found another market cycle here. And then it broke. Okay. Now these market cycles that experienced in these time frames were very profitable. I mean, this thing ran up 230%. I think the previous one was about the same, almost 300%. So there's a lot of money to be made in these markets. You just got to know where to get in and out, guys. It's really that simple. You guys got to know where to get in and out. So this one did the same thing. Okay, once it broke out and left behind its old market structure, which is basically left behind here. Once it made a new high, everything before that was basically just like price discovery, basic price discovery. This entire area, all here, is just price discovery because it broke out and created new. Look, Dash did the same thing. This is exactly, Dash is behind Monero. Okay, that's why I think it's the same whales, same money. We're seeing a lot of the same emotional structure here, especially in these two. Okay. Now, after it left behind its market, old past market cycle, what did it do? Create a new one right here. You can watch the volume too. The volume comes in, bang. All right. This is just about like where, just this point right here. It's just about kind of where I was asking everybody, who's going to buy the retracement on Dash? And people are saying, no, you're crazy. Well, no, it's creating a new market cycle. That was the prime time to get in on Dash on that retracement. This was the prime time to get in on Monero. See, you don't want to, just let the market do what it's going to do and react to it. Okay, if you see this thing breaking out like this, don't chase it. Just don't even chase it. Just wait, because everybody that bought it here, unless you bought it down in here and you're holding, mostly everybody who bought after this point right here, okay, anybody who bought after this blue line on the way up lost money on the way down, just that fast. If you're trading a margin, you're stopped at a break even. You are liquidated your position, okay, because you chased it. Now, that's how bulls get wrecked in a bull market, by chasing the market. You cannot chase the market ever. That's why I do not take a trade unless I can plot it out for at least a couple hours in advance. Meaning, like here, we're looking at a 12-hour chart here. There's plenty of time to take a position in a market when you see the market do this. Okay, there's plenty of time. You just don't chase it. You say, okay, where did it break out from? Here's where it went to. Let me get that retracement. Let me try to get that 61% or that 50%, depending on how bullish it is. Let me try to get that retracement. Even if you can get down here at the 78.6, that's the best entry because it's the lowest. But maybe the market's not going to fall that low because it's extremely bullish. Okay, but you never ever want to chase the market. Okay, and when we break down the way that this market unfolds, it unfolds in Elliott waves. Okay, it unfolded in Elliott waves. Bang, like this. Now, the Elliott wave, to me, now it's just a theory. There's no you can't take this same thing and overlay it on every market. It's going to show up pretty sometimes. It's going to show up ugly, and sometimes it'll just be a straight up, and you'll just more so see the retracement side. And you'll have to find these waves on the lower time frames. But that's what's making up the market structure. Okay, as things increase in price, people are losing money. Even though price is going up and people are saying, this is great, this is a buy, they're still losing money. And you have to understand that because they're playing the market in the wrong way. So that's why I trade Elliott wave theory, is because once I identify that things are creating a new impulsive cycle, I want to identify the places to get in and how others are losing along the way. All right. For instance, in this fashion right here, this is set up so it liquidates all the people who chase it. Okay. Now, meaning that if you chase the market here on the way up, if you chased it, when the market comes back down, you lost money. All right. And if you didn't buy the retracement here, like number two and number 4 are my entry points in a bullish market. I will never try to buy wave 1. I will never try to buy wave 3. Only if I'm late to it and I see it breaking out, but I'm always expecting for this wave 4 to come. So I'll explain that to you. Wave 2 point and wave 4 point are what you want to look at for your entries, because that's when you're buying everyone else's fear, basically. You know, like the market goes up and then it starts to come down and people are scared. They're like, oh, this guy's having a hard time joining and I'll have to talk to him and see what his problems are and work it out with him. Because what happens is the market impulses up, and then when it comes back down, people are scared. They're saying, oh, well, you know, maybe this isn't going anywhere. Look how high it is in price, and, you know, they start to get scared. So this is the point where you're buying everyone else's fear, okay? Like, you have to be patient. You cannot chase a market. You have to wait for the retracement of it. Because this next wave coming, according to our Elliott wave principle, and we'll get into that in our next couple sessions, has to be longer. Okay, this wave 3 has to be longer than the first. It has to expand in price so much because it makes that progress. Okay, now what happens here? If you didn't buy this 2 point and you're a breakout trader, okay, let's say you trade breakouts. And let's say you want to buy it. You want to buy this on this way up after it beats this high. Okay, so you buy here and it looks really good and you start buying. Well, then the market comes back down. And so a lot of the time the market will come all the way back down to here as well. All right, that does happen quite often where basically it will liquidate anybody who bought the breakout. So if you don't buy 0.2 and you buy the breakout, the market is set up so it's going to go up and come right back down and liquidate you, or leave you with no profit, or leave you at a negative balance for your coins and really leave you questioning your trades, basically. That's the whole purpose of it, is to leave you confused, okay? But if you study Elliott wave theory, you're expecting that wave 4 to come down. And actually, like, if I miss my wave 2, sometimes I'll buy the breakout here and take quick profit, but I'll always be looking for this 4 point. 4 point to be relatively close to the top of this last wave, like right in here, for a good buy zone. You know, after this thing breaks out, makes this run up and starts to dump back down, I'll be looking anywhere near the top of that wave 1 to get back into the trade. Because that's when everybody's like, oh man, this thing's tanking, it's going down, it's going to go back down into, you know, nothing, you know, it's a scam or whatever, however they want to call it. That's when you're buying everyone else's fear for that next leg up. And make no mistake, these markets impulse in sets of 5 waves, okay? A 1 up, a 2 down, a 3 up, a 4 down, and then a 5. And I found in cryptocurrency that 5, this last leg up here seems to be the biggest, because that's when everybody's like, oh, this thing's really going to the moon. This thing's really, this is the wave that's going to make us all rich. And then what happens is it comes down, and then it reaches this point right about here. And according to our market psychology cycle, after our 5 waves up, this point right here is this, complacency. Okay? That's complacency. You don't want to get caught in complacency. Oh, you're looking up there. You don't want to get caught up in complacency. You want to understand when it's time to get out of your trade, and understand that your trend that this whole thing was riding on has snapped. All right, let's get rid of this. Everything rides on a trend, whether it's a big trend, a little trend, whatever it is. But usually after we get our first wave, we start to get a nice, solid trend. This one could maybe even kind of cuts into that wave, so I always really take it from the two area. But you can see we got a nice, after we had that 1 and the 2 and we broke out again, we got a nice trend that this thing follows until, look, it broke. Now you can draw a trend. As long as you have 2 points, you can draw a trend. You know, we're going to say, okay, from this bottom point right here on this wave, where it touched this wave, now we got a line we can draw. All right. The more points, the better. But if you got 2 points, you got yourself a possible trend. All right. This thing here, from here, tagged here. Now we got a nice little trend. Tagged here, but it broke. And now after that, the trend broke. All right. Now this is where obviously the trend traders are are basically starting to take their sell positions, realizing that the trend has broken and we're going to continue down. There's a lot of people that don't even realize support, resistance, trend, or whatever, and they're just buying this thing all the way down. I mean, think about it. For every sell here, there was a buyer. Okay, so really identify that. Like, and we started a downtrend. Obviously, look, downtrend here, trending down, trending down, trending down. This thing didn't even get a hope of continuing on, and look at it like a possible buy until it broke this line. Until it broke this line right here. Same thing that's going on right now. So really identifying the support and the resistance and the trend can save you a lot of wasted time and energy. What side of the trade you should be on. So now when this thing broke its trend right here, this is where the pattern traders, the trend traders, they'll come in and they'll say, okay, it snapped the trend, let's start selling it. But we're already looking here because we got 1, 2, 3, 4, 5. This little wave back up here, we're already looking at this like could be possibly complacency right now. That's why I'm saying I wouldn't short Dash just yet, because Dash looks like it may get a little bit up a little bit and get that complacent feeling in the market, and then we would want to sell it, okay? But these things are all creating the same market structure, guys, over and over and over again. And what's going to happen here, now that we had a complete market cycle bubble here, all right, and this one also probably, probably held about 78.6%, 88%, yeah, same zone, all right? This is when nobody wants it. This is when you have to think about this. Like, why do these things keep falling to these retracement points over and over again? Because most people are losing and they don't even understand how to trade the market. Okay, like this is the time that you should have been buying the market. This whole impulsive wave up. This is buy time. You could even have made money still buying in here and selling it real quick because you're going with the momentum of the market. You're going with the flow of the market. There's always you can buy here if you're ready to flip it again and you think that there's that greater fool theory, like where there's somebody that's going to buy after you. That's when you can buy here and still sell here. But it gets to the point where there's not going to be any greater fools. And that usually happens at strict Fibonacci extension points where the human consciousness, it's weird. It's almost like our human emotion reaches a point where it won't buy anymore. And I'll break that down to you guys when we start talking about Fibonacci extensions and retracements. More so when we're talking about extensions in price. It's really interesting how we keep hitting Fibonacci numbers again and again. There's no denial in Fibonacci at all. So we have to ask yourself, why do these things keep coming down into this area over and over again? Because most people are making wrong decisions. They're buying up too high, or they're buying it here thinking it's going to continue, or they're buying it here thinking, oh, okay, this looks like a good deal. And they're not realizing that this thing is going to bleed all the way down. It has to complete its entire market structure. It has to get people to the point where they feel angry, and they will just want all their money out of the market, and even depressed, and it has to go through all those emotions before it becomes a buy again. It really does. And then once it breaks free, what does it do? It creates another market cycle, a whole another market cycle. Now, looking at Monero here, for instance, let's see here. Okay. Now, Monero is a very interesting one. I think Dash is going to wind up doing the same thing. Well, just mind you here real quick, let's take a note of this. Let's look here at Monero and where it wound up going after it did its really big run up, leaving behind all its price discovery. And let's look at Dash. Okay. Left behind all its price discovery, doing a nice run up. Where do you think this thing's going to fall when it's done? You think it's just going to keep going to the moon? No way. No way. This thing is going to fall. Most likely back down to here. Okay, most likely back into this area where it will get another market cycle that will come out of it. So I wouldn't even buy Dash again until it's back down to this area, honestly. After it snaps this trend that it's on and we see that the market's getting complacent and the trend breaks and people start fighting the trend and we're looking at shorting the tops, I would not even buy it until it comes back down here again. Simple as that, because the market is going to go through an impulsive set of buying and an impulsive set of selling as well, all the way down, all the way down. Now here, what happens when the market cycle ends? Okay, well, it creates a new one. And that can really easily be calculated by support and resistance, or even it shows up sometimes as a falling wedge. Basically, you take a wedge where the price kind of wedges out like this and becomes like a falling wedge, and all the pattern traders will look at it like it's a falling wedge, and once it breaks the wedge, they have to buy again. I mean, we can find the falling wedge on basically everything. All right, like we'll just point out the falling wedge real quick. Okay, Monero, Bitcoin, back it up here. Get rid of all these drawing tools. Back it up here for Bitcoin. Same thing. It creates the wedge, which is the wedge is basically a downtrend. Okay, like this. Like this. Now Bitcoin has some little expansions outside of some price expansions outside of the wedge here, but we'll get into explaining that a little bit more with the open and close. Okay, when we start talking about candles, if you look at the line price represents the true open and close of the market and not the expansion in price. We can see that it did respect the wedge for the most part, but of course we had a lot of panicking and that kind of stuff. But those were good opportunities to get in on other people's panic. Ethereum, same thing, wedged out. Right here. Okay. So if you guys have been following my Twitter for a while, you guys know that I was not buying Ethereum at all until it broke this line. Okay, basically right there. Okay, which is also the wedge. Basically same thing. Creates the falling wedge. If you look at this like this is where all the other traders are looking at it like, oh, this is a falling wedge, you know, it kind of price wedging down. That's just the retracement cycle. That's the ABC correction. But once the price breaks free of its downtrend, okay, here we have a high, a lower highs all through here. We tagged it with a lower high, and I was expecting this thing to actually bleed down a little bit more. But once it broke that line, it was game on. Basically, game on to start a new market cycle. Okay? Which is interesting because Ethereum really didn't hit that 88 mark. We only got like a 78.6 out of it. Well, we almost hit it. Sorry about that. We just about hit it right there. So look, same thing. Same relative, buy zone. If you still want to buy before things break out, that's the place to do it. Okay? After the complete market cycle bleeds down, everybody's like, get me out of this thing, and they're depressed, they're angry. That's when you want it. That is when you want it. If you don't get it there, honestly, I don't buy inside the wedge. I wait for this line to break because I'm an Elliott wave trader, meaning that if I buy here, I'm guessing and I'm holding for it to happen. Okay, which most likely is going to manifest. But if I stick to my Elliott wave practice, then I'm going to be looking to get the retracement of the breakout. Okay, like the breakout move here, I'm looking to get a retracement of that breakout. Now this one didn't really retrace very far, and we have other factors that showed us that it didn't want to penetrate this cloud. And we'll start talking about the Ichimoku cloud more in our further lessons. But this is kind of, you don't want to get this thing until you really see. Like I did not buy it all in here. Sure, it was a great buy area, but once it didn't break the line here, I was under the impression it was going to keep bleeding down. But once we broke the line here, once we broke it here, that's basically when I started telling, a lot of you guys that have been on my signal service for a while, that's when I was saying, hey, Ethereum is a buy again, buy the dips. It broke it out. It's creating a new market cycle. And all of these coins, guys, almost all of them are creating new market cycles. All right, we can run through a little list here of we're just creating them over and over. We got, well, Nautilus's coin is a pretty ugly one, even though it's creating a new market cycle. But let's look at Saya coin real quick. What do you see here? Market cycle. Okay, the complete market cycle. All right, same thing. 5 impulsive waves up and a deep retracement. Or 5 impulsive waves up. 1, 2, 3, 4, and then bang, nice 5 all the way up. Our ABC retracement. Basically where we got from our top here down to here, and then bang. The same principle. Like this whole side of the market here is not when you want to be buying it. And these are also, like I mentioned, these coins are not, stuff like this, like Ardor Strat and Saya coin stuff. You can't take a leveraged margin position against the market in these markets. So you're gonna see the impulsive side pretty clearly, because this is the human emotions of like, okay, let me buy this thing, it's going higher, let me buy it, it's going higher, and people are losing or being at a negative balance along the way. But this retracement side, we don't see the smooth waves of trade, I guess you would say, because on a lot of these altcoins, you just see like the bleeding out ABC retracement, because most of these you can't trade on leverage. So basically this entire side of the market over here, okay, this entire market side over here is people fighting the trend. Okay, it's people who actually bought coins in here and are, questioning whether they should hold them, sell them at a loss, and so that's why it bleeds down a little bit more. If you were to have a market that had leveraged trading in this zone, you would see more distinct waves of like impulses down and, ABC retracements back up and then impulses down. But this is, on these altcoins, most of what you see on the retracement side is just bleeding out. People that say, oh, should I hold this? Maybe I'll buy more, it's going to reverse here, or, oh, it's reversing here, and not realizing that the show's over. And really, in all these altcoin markets, since you cannot short them, I don't even focus on them. Like after it's done its impulsive side of the market, this is all I look for in alts, unless we can short them. This is all I look for in altcoins. That's it. After this point has passed, I don't even pull up the chart anymore. Until it gets back down to where it's a buy again, because I can't sell coins I don't have and take a leverage position against the market. So this market in this entire down phase is of no interest to me at all. That's of no interest to me. If I could take a leverage position against the market, then it would be of very much interest to me, because I would be, every time it pops up, I'd be playing whack-a-mole with it, knocking it back down and shorting it. But we can't short these markets. So this is all just people that bought too late, just bleeding down. And it's the same thing. We're seeing it in all these markets, all of them, again and again and again. And you see it, and now, wow, this one got pretty nice up here. This one we played on the signals list from it was like 700 we bought it. I was looking for 1200, but we only got to like 950, and sure enough, this thing exceeded that 1200 target eventually. But same thing, guys. What do you see over here? Market cycle. The complete market cycle. And how did it present itself? I mean, we're looking at a daily here. Let's look at a 12-hour to get more distinct wave count. But it's the same thing. This entire impulsive side up happens in the L8 wave psychological market impulse, and then it will bleed all the way down. Bang. 5 is just like the banger. Whoops. Come back to me. Bang. So we're going to get into the rules of Elliott waves a little bit later. This one still seems like it followed the rules from the breakout. But same thing, it impulses, it staircases up, and then it takes the elevator down. Okay, and this same thing here, this couldn't be margin shorted, so it just bled all the way down, all the way down, all the way down, until it held a pretty good retracement of its entire move, and then it created a new market cycle. And that's what it's doing right now. Basically, there's a lot of opportunity in money to be made in cryptocurrency right now because several reasons. A lot of these coins are making new market cycles, and if we learn how to map them out as far as like the staircase of the Elliots and stuff, there's a lot of money to be made in and out of the market. But there's also a lot more interest in cryptocurrency right now and a lot more people coming to play the game. So we're getting a lot more volume, a lot more market cap. And this one even did 100% retrace. So, an ugly retrace here. But that doesn't mean that this thing won't just be a whole big 1 and a 2 wave when this, in a couple months when this thing is done. But this is what happens. The market cycle repeats itself over and over again in all these coins. Okay, so this is what we're looking for. We're looking for these emotions to be felt, especially this complacency one, when we know it's time to get out. When our trend breaks, the market seems like it's getting complacent, out. Don't even look back unless you can short it. And then, like for instance, when Dash comes crumbling down, since we can short Dash, then we're going to be, once it breaks that line and breaks the trend, it's going to be, back to sell the tops, not buy the dips, sell the tops. But most people won't realize that, and they'll be fighting the trend, and they'll say, oh, well, this is still going to go, and they'll fight the trend. But that's where, the people that make the 10% out of the market are making that 10% from the 90%, honestly. And the 90% of people are making wrong decisions. They're making emotional decisions. See, as this unfolds, you have to be aware of it. You have to realize that if this thing gets up in here, we're reaching that euphoric level. We're almost at complacency now where the market goes so far and it seems like it's still going to go and everybody gets complacent. They're like, wow, this really is a good buy. And you wouldn't even believe the amount of people that will step in and buy this thing now saying that this looks like a good buy. I mean, it happens over and over and over again, especially in cryptocurrency, because you have to think about it. A lot of the people that have had Bitcoin for a while, at least, over the last couple years, most of them got Bitcoin because they got lucky. They got it when it was cheaper and now it's worth a lot of money and they want to, take that money and make something out of it, but they don't understand how to trade. So you would be, that's why we're seeing lots of dumb money even throw money at pumps when they're at the top. I mean, I've had several people come to me and say, oh, I lost 20 Bitcoins in this pump or, 50 Bitcoins in that pump. And I'm just thinking to myself, the stuff that we're going to get into in the next lesson is where's your risk management? Where's your trade management? Where's your understanding of the market? Like, you don't come in and throw $20,000, $50,000 in the market in the wrong spot and not, you may do it once and twice to get lucky, but it's not going to happen again and again and again. You're going to get wrecked unless you understand the geometry and the cycles that are taking place. So there's a lot of really good opportunities here, a lot of these markets, but we have to understand what's going on, okay? What's going on is Elliott waves, okay? What's going on is waves within waves. As we make our initial rise, there's going to be waves within waves, and we're going to have correction waves as well before we continue. But this is the emotions that are experienced along the way, okay? And this is undeniable. Like, once you understand the psychology of what's going on in the market, you start to look at the market from a different perspective. You start to look for opportunities to gain on other people's loss. And it may sound like, you're preying on other people's loss or whatever, but, I don't know. I don't really have any moral problem with it because it's kind of like this. If you're going to play the game, you should know the game that you're playing. And why not be the one playing the game that's making the wise, profitable decisions? You know, you don't want to be the one that's losing. You know, like we all lost. I mean, guys, like I've gotten good at this now, but only within the last 2 years. I've been trading for over 10 years. It took me 8 years of loss to figure this out. All right, really think about that. It took me a long time. Like I quit trading almost 2 times, definitely, and 1 time where I was just like I kind of quit, but I really felt like I could do it, but I would question myself. But you're going to go through that. And hopefully, you know, as I get this information out there, you know, and have these courses, I'm going to be educating more people on how to prevent loss. Okay, because, you know, it may cost a Bitcoin to take these classes and get shown this stuff, but I'll tell you, in the long run, that 1 Bitcoin is going to be a lot cheaper than throwing 10 and losing them in the wrong spot, or 20, or whatever your case may be. Even if it's 1, you know, like there's a lot of loss here. Okay, so many people have been shorting this on the way up with Dash. So many people that don't understand the market cycle. They see it here, they see it break here, and they get up here. Oh, let's short it. And then once the price is, it comes right back around. Oh, here, let's short it. Keeps coming. Man, this thing, by the time this gets to the complacency stage, the shorters and the bearers and all the sellers are going to be worn out. They're going to say, oh, they may even buy the market. It may psychologically twist them around to where they're buyers because they tried shorting it so many times and failed. So you really needed to keep that in mind. Most people are losing at this game, really losing. And I'm not like, I don't win every trade, and you guys are not going to win every trade. Like I've come to the point where it's like about 80% of the time I'm right, but when I'm wrong, I set up a stop loss and I get stopped out with a small loss. Okay, like you guys have to be able to, and we're going to talk about that in our next session, about, you know, understanding loss and understanding trade management and risk management and understanding how to control your emotions. We're going to cover that in the next one, because you have to understand, we have a system here in place that works most of the time, but you have to recognize when it doesn't work and be like, oh, it didn't work. And don't let that bother you emotionally, like, oh, I failed or whatever, or, you know, just burn it out. Same way you would want to burn out a thought that says, oh, that was a great trade, I should have put all of my money into that. You want to burn those thoughts out too. Like don't trade like that. Like, because with great power comes great responsibility. Like with great knowledge comes great responsibility. So what we're learning here is to how to actually extract money from these markets, from the 90% that are losing. And with that knowledge is going to come great responsibility. Like you don't want to, you know, remortgage your house and go all in on leverage on a certain point in a move, because trust me, that one time that you do that will be that 20% time that you're wrong. It's just the way the universe works. Or you may get lucky, I don't know. But for me, I kind of have humbled myself to where I kind of only trade with a certain amount of money. That's it. That's it. Even if I know that, hey, this thing could go 100%, I will still never sell everything and put anything into a trade, and never go all in a trade, ever. Ever, ever, ever. Because if you go all in trading, you're wrong, then you don't have another chance to go all to even piece yourself together anymore. You know, this is like, I don't know, like everybody's going to have their own way that they take this information and use it. But be responsible, guys. Like really be responsible, because you don't want to trade with what you can't afford to lose, and you want to prepare for that loss and understand that there are going to be losses. There are going to be times that you're going to be wrong. You're going to get a wave count wrong. It's going to retrace further than you thought. But you know, just deal with it. You know, you just have to understand. You deal with your losses and you cut them short and you let your winners ride, and you try to maintain a good strategy to be in this for the long haul. Because for me, I'm in this for the long haul. I want to be, you know, I'm 40 years old now. I want to be 65 years old and still be sitting on the beach somewhere in the world and popping out my laptop and saying, okay, where can I pull money out of the market today? Like, I still want to practice this for years to come. I don't want to just like throw everything I have into one trade and get rich and say, okay, that was great. I got lucky and now I don't have to do this anymore. You know, but like I said, everybody's going to have their own way that they trade and that they utilize this information. So just kind of, you know, trade responsibly. And and understand what's going on. Don't become caught up in these patterns. That's the number one thing. And that's why we're starting with the psychology of the market. Do not get caught up in the psychology of the market. Have a reason that you got into the trade. Have a good feeling. Like for me, it's like I won't take an impulsive trade because most of the time, by the time I'm taking the impulsive trade, unless like maybe I pull up the chart and it's right where at my number 2 point or my number 4 point where I want to get in at that moment. But I'm trading from a different perspective now. Like I'm providing trade opportunities for at least 50 people now. So I want to plot these trades out that are really precise and very, with a very small window for error. And so I want to be able to get those trades out at least a couple hours in advance of what I'm expecting the market to do. And if it comes to that point, then we react. But I don't want to ever chase anything and send out a signal that's like, hey, this is breaking out right now, buy this. Because most of the time, if you buy it too late, it's going to come right back around. So just keep that in mind too. As you see things move, wait for them. Wait for them. Perfect example, and we'll finish up with this, would be Zcash. Okay? Perfect example. We all know that this thing is going to, all right, I'm looking at the dollar here on Zcash because I'm actually trading it against the dollar because I sold a lot of my Bitcoin before it dumped and used that money to buy into alts. So because there just seems to be a lot more money to be made in altcoins right now. But look, we all know that this thing is going to go. But when's it going to go? Okay? If you buy this impulsive candle right here, you're screwed because it has to go through its consolidation point. It has to go through its consolidation point. Everybody that bought basically past this point right here. Okay, anybody that bought, if you bought down in here, you're still safe, even if you didn't take profit. But if you bought the breakout, okay, you got stopped out, liquidated, or lost money right here on this candle. Or you questioned your trade and said, oh man, maybe this was not the right time to get in. Okay, but this is where I bought. Okay, this is like when it came back down here and tagged this line in the low 50s, this is where I bought. Now, mind you, I did buy a little bit on the breakout right here, but just to flip it. It seems like some of you guys are coming in and out. Let's send me an email and or send me a message on WhatsApp if you guys are on my WhatsApp. I'm trying to figure this out for the next session because if you guys don't have sound or the picture is not clear or something, we got to figure it out so that you guys all have the equal experience. But this is recorded, so you guys will be able to watch it later today or at your convenience. But here, we'll just end with this. You don't want to chase anything, guys, because when you chase it, it's going to come right back around, stop you out, make you question your trade. This is where you want to get in on something like this. All right. My saying is, don't chase it, retrace it. Simple as that. Do not chase it. Look for the retracement of it. And here we'll just end on this. Basically here, bang. Beautiful retracement here at the 78.6. Beautiful entry point right there. Anybody who bought up in here, bought too late. Too late, and they're questioning their trade right now. They may get shook out. They may not understand the market. They may say, oh, I can't deal with this loss, and then they sell. Let me get out, right now. And they sell, not realizing that this thing is going to, continue. So understanding the way that these waves are unfolding and how that relates to the emotional market structure is the only thing that has made me money in any market. We can find this in stocks, we can find it in Forex, but I'll be honest with you, it is showing up more in cryptocurrency than any other market that I've traded. This emotional market structure has shown up in cryptocurrency more than any other market I have ever traded. Okay? These Elliott waves are showing up more in these markets than any other market I've traded. And I really think that is because, I hate to say it, but because there's more dumb money in these markets than anywhere else, okay? Meaning that if you're going to trade stocks or foreign exchange, most of the time you got to go through some sort of a brokerage house, or you got to have some sort of an entry barrier that you've crossed where you feel like, okay, I'm going to deposit money into this broker account. It's hooked to my social security number. It's hooked to my identity, my bank account. This is a professional decision I'm making to try to, embark on trading, whether it's stocks or foreign exchange or futures or whatever. But with cryptocurrency, we have people just rolling into Poloniex with an email address and throwing thousands of dollars into these markets. Okay, that equivalent is dumb money. Okay, so you have more dumb money in the average retail trader because there's no barrier to entry at all. All you need is an email address and a little Bitcoin. That equals dumb money in the market. Number one. So the retail traders are dumber. Number two, the whales, the people who have more Bitcoin or even have the power to influence the market. Now, if they're a whale and they're doing it right, then that's cool. They're using their Bitcoin to influence the market, manipulate the market, and we can track their movements and make money off of their waves. That's fine. But there's a lot of people that I would consider, of whale status, but don't know what they're doing either. Meaning that they have, at this point, since Bitcoin's value is increased so much, if you're throwing more than 20 Bitcoins into a trade, you better know what you're doing. You better know what you're doing straight up. Because you're taking a huge amount of risk with an amount of money that is more than most people's salaries for the whole year. Okay, you think about that, man. I live in Costa Rica. People here work for $3 an hour. So there's people throwing more money into a trade than people here make all year. And if you're going to be doing that kind of a trading decision, you really need to know what you're doing. So we're going to talk about risk management, becoming the 10%, and how to use this emotional pattern to your advantage in the next session. But really realize that there's more dumb money in the cryptocurrency market than any other markets because the retail traders are signing up with email addresses. There's no barrier to entry. Anybody can do it. And the people who have a lot of money that they're throwing towards the trades, they either are coming into it like they're gamblers or people that just came up on a large amount of Bitcoin value. Maybe they've had Bitcoin, they're gamers or computer people from before or something that has Bitcoin from before and now it's worth a lot of money. So they say, okay, well, I'm going to make this money into more money. But they're just more dumb money. Okay, like somebody even pointed out to me on Twitter this morning, they're like, yeah, even the people that have money are dumb. So it's it's exactly. That's why this emotional pattern is showing up time and time again because there's more dumb money in the market, which makes perfectly good sense because on a market that runs on emotional patterns, if you have stupid money in the market and people that aren't understanding their trades, then people are trading from all of these points of view. Okay, all of these emotions are being felt. That's the thing. To become that 10%, you have to recognize this. Recognize that when we're in certain stages of the market, that's when you want to get in because that's when everyone else is scared. When people are getting really greedy, that's when you want to start to look to sell. I mean, I'm sure you've heard it before. Sell into greed and buy into fear, but it really is true. All right, it really is true. You have to really prey on other people's emotions to pull money from these markets. If you don't, if you fall prey, if you become one of the people that's experiencing these emotions, you're going to lose. Simple as that. As soon as you get impulsive and throw money at a trade, I'm sure all you guys have experienced it, where you get into a market, you're like, oh, this looks great, and you throw money at the trade, and then right away you lost, and you're like, oh man, what did I do wrong? It looks like it's going up, or maybe the other way, it looks like it's going down, and it comes right back around. So understanding these market patterns is very crucial, guys, very, very crucial, and you can see now how they're showing up in cryptocurrency time and time again in all markets. But we're going to focus, this entire webinar focus is on cryptocurrency because to me right now, cryptocurrency is more profitable than anything else that we can trade for two reasons. Increasing liquidity with dumb money Okay, those two kind of go together. Like there's a large amount of liquidity now with dumb money in the market, and the fact that a lot of these altcoins, if you're trading spot markets, you really don't have much risk. I mean, you really don't, unless you're going to put a stop loss and say, you get stopped. Like if you're going to buy a bullish market on leverage, and you have the chance that you're going to stop out and have that risk of loss. But if you're going to buy a bullish market on spot, even if the price comes back around, maybe you're looking at a negative balance for a minute, but if you have the trend right and you hold for just a momentary in time and are patient for the trade to work out, it still comes out to your advantage. So there's a lot of money and liquidity to be made in these altcoins right now on the spot markets, meaning that you can get a 35 to 50%, maybe 60% increase in your value just by playing a spot market where there's really no risk of being liquidated. So and the liquidity is there and the market cap is growing. So you can literally come into these markets now and throw a lot of money at them and get right back out and increase your money without much risk of being margin called or liquidated or everything else that goes along with trading, in the other financial markets. So keep that in mind. There's a lot more money to be made in cryptocurrency right now. And this is why, because this emotional market cycle is playing out again and again, and we're going to map it and we're going to make money off of these waves. All right. Especially the big ones. These little ones, they're cool to play on the 5-minute chart if you want to scalp or if you want to, try to buy every little dip, but I try to mainly look at the bigger picture and where we're going with it. So, well, that's it for today, guys. Hopefully you guys have got something out of this first one. Please send me an email or a message on WhatsApp if you didn't hear or why you were jumping in and out, so I kind of know, because this is the first time I'm using this platform for multiple. I do this for my one-on-one sessions and sometimes a couple guys, but when we get like 6-7 people in here, I want to make sure that everybody can hear and see clearly. So you'll be getting an email from me for the next session on Wednesday. And if you're on the signals list, I'll probably be getting a signal out later on today. And until then, you guys enjoy, keep stacking it, and be conscious of your trades. Look at the markets that you're thinking about buying and identify where we're at in the market structure, where we're at in the cycle, and what emotions might be, might the rest of the market be experiencing, and tune into that. So, well, that's it, guys. I got to run, and we'll catch you on Wednesday. You'll get an email from me probably Tuesday night with the same thing, with the invitation to this Join Me. So enjoy, guys. Keep stacking the Bitcoin, and I'll talk to you later. Peace out.